Hello friends, it's Hi5 Trainer. In this video, we're going to learn about Opening Range Breakout Strategy or ORB.
But before we go into the video, if you haven't already, please subscribe to our channel. As you can see, I've made videos on candlesticks, candlestick patterns, moving averages, relative strength, RSI, and I'm currently editing a video on VWAP, so that'll be out soon. And I'll be making even more videos, so please subscribe. In this video, I'll be showing you the opening range breakout strategy in 3 different time frames: 5 minutes, 15 minutes, and 30 minutes. The time frame that you use depends on how confident you are with this strategy and trading overall. If you're new to trading or are a beginner, I'd recommend that you use the 30-minute time frame to avoid whipsaws, etc. And as you get more used to this strategy, you could move on to a shorter time frame. So the opening range breakout strategy or ORB is a simple but profitable strategy mainly used by beginners. To learn about this strategy, let's take a look at some charts. This is Microsoft's 30-minute chart. Before learning about the strategy, we need to learn that this is an intraday strategy. Therefore, the order needs to be squared off at the end of the day, no matter if it does not hit your profit taking or stop loss. To choose the stocks in play or your watch list for this strategy, you need to find stocks that have a catalyst, for example news, and then you determine whether it is bullish or bearish. Bullish is a positive catalyst and bearish is a negative catalyst. Then look at the overall market's trend and check if the catalyst and the market's trend match. You could also look at the sector's trend for greater accuracy. As we can't check the market's trend and news for the previous days, I'll show you the strategy only based upon the price action. So the high of this candle, so this is the first 30-minute candle, so the high of this candle would be over here. And the low of this candle would be over here. So you will short sell when the price goes below the low, and you would buy when the price goes above the high. So in this scenario, you would short sell over here, so right here, and if you were to short sell over here, where would your stop loss be? Your stop loss would be at the high of the first candle, so it would be over here. Then your profit taking or your target would be the distance from here to here. So that's 2.09%. So your target would be over here. Therefore, the risk reward ratio for this strategy is 1:1. If you see here on the last candle, your target or your profit taking got hit. So therefore, you get 2% in profits in this trade. This is exactly what the strategy is. You can apply the same strategy on 5 minutes or 15 minutes, but make sure that you get better at this strategy before you move on to a shorter time frame. Now I'm on Microsoft's 15-minute chart and I'm gonna plot the highs and lows of the first candle. So this is the high and this is the low. So the price broke the high over here. So if I was to take a long position right here, my stop loss would be over here and my profit taking would be at a 1:1 risk reward ratio, so it would be somewhere over here. As you can see, my profit taking got hit here, so I'll get a 0.67% profit. This is Microsoft's 5-minute chart. Now I'm gonna plot the highs and lows of the first candle. So the highs are, so this is the high, and this is the low. So if I was to take a short position when the price broke the low, so if I take a short position here, my stop loss is gonna be right here. That's my profit taking or target, and my risk reward ratio is 1 as usual. That's it for this video. Thank you for watching. If you like the trading related content that I'm sharing and want more trading related content from me, then please subscribe.